The pound has been front and center in the world of FX this week as the Brexit story works towards that next turn in the road. At the moment, the market sees one turn that will drive the currency off a cliff and another turn that takes the currency on a road to recovery. The latest setback comes after Theresa May delayed the vote to approve or reject her Brexit deal with the EU after it had become clear there was no chance of the deal getting approved. The PM believes further reassurances on the Irish backstop are possible and, if provided, will turn things back around and get the deal approved. We are now in another wait-and-see phase as we inch closer to the Brexit date in March 2019. In the grand scheme, the pound has actually held up quite well considering, with the currency also contending with disappointing data on Monday in the form of manufacturing production, trade, and GDP. Today, we get UK employment data along with Eurozone and German ZEW readings, followed up by US producer prices in the North American session. One of the reasons setbacks in the pound have been less intense than what might have been is because of this renewed round of US dollar selling that has kicked in. Messages out of the Fed have been decidedly less hawkish of late, and the market is now considering the possibility the Fed pauses in 2019. This has moved those yield differentials back out of the dollar's favor. We also need to remember the U.S. administration's soft U.S. dollar agenda, something that has been in the background on account of this latest truce between the U.S. and China, but something that could also have a major negative impact on the dollar into next year. Getting back to the shorter term, currencies have been mostly consolidating with the exception of the pound, though the Canadian dollar has been notably weak in the face of the collapse in the price of oil since the market had topped out at its highest levels since 2014, just back in October. The loonie has been saved a little by some stronger data, as evidenced by last week's stellar Canada jobs report, while that risk for US dollar outflow could also help to prop an ailing loonie that sits just off its recent 2018 low against the US dollar. That's all for now.